All right, greetings YouTube, coming live from Alpha Trading. What is Alpha Trading? We are a group of volatility, probability, and statistic traders. Let's see, we're going to take a look at BTC. We just got the new daily open. Let's see what's going on here. Let me turn off my projection bosses real quick. Let's get some current candle probabilities for the day, right? So what I'm going to give you here are probabilities. We're going to give you some normal distribution numbers, and we're going to give you some Laplace distribution numbers. For Bitcoin, the 68.3 Laplace distribution range, top side 52,341, bottom side 50,887. Top side, 95.4% Laplace distribution range, 55,587. 95.4% to the downside, $47,914. 99.7% Laplace distribution range to the top side, $60,674. And the bottom side is $43,900. Now to normal distribution. First standard deviation to the top side, $53,764. First standard deviation to the downside, $49,246. Second standard deviation to the top side, $56,176. Second standard deviation to the downside, $47,131. Third standard deviation to the top side, $58,697. Third standard deviation to the downside, $45,108. Those are the probabilities for this current candle on Bitcoin. Now let me turn on my projection bosses. Boom. So what is this projection boss? So what I've got here, these are projections of the Laplace distribution range. Okay, in a random market, there's only one way to track price action. That is with these distribution models, okay? That this market is nothing more than geometric Brownian motion, right? It's random. 90% of the time, any market is random, right? And 90% of the trades going on in a random market are being done by high frequency trading firms using distribution models, volatility, and statistics, okay? So what I've got a distribution. I've got it started right here. After the 28K low up to the 43K high, we had a 4-day down move. You can see how the 95.4% Laplace distribution range supported price action, bounced from there. This daily candle right here came back down, wicked right to the 95.4, bounced. We started to stabilize above the top side of the 68.3% Laplace distribution range. Then we had a 10.5K daily candle that came back down to the dollar and tested the mean of this projection. Went sideways for almost a couple weeks, had a second dump that tested the bottom side of the 68.3 Laplace distribution range, had a couple days of up, couple more wicks throughout the few days here. Another candle closed down here testing the bottom side. That's where Bitcoin picked up. Okay, and now you can see, let me turn off. Now you can see we have closed two previous days. We have closed above the 68.3 Laplace distribution range. Now when I go to the other charts, I'm going to show you a little bit of bear divergence on some 4-hour, 12-hour daily charts that could possibly bring this daily candle back down to test the top side of the 68.3 Laplace distribution range on this projection. Price action about 48,748. I mean, it's a couple K, right? A little more. So do we go down and test that? It's all probabilities, right? It's all probabilities. Let me turn off this. And let's go now. I'm going to start from this recent up move of our projection boss 1. You can see we closed today's candle above the 95.4% Laplace distribution range. Now, the top side of the 95.4 from this move up, let's see, it's about 50.5. Now, in my opinion, that's a little more, that could be a bigger possibility than that longer projection of testing the top side. Just depends. Bitcoin's looking pretty bullish. But on this daily candle, we could come down and test this first standard deviation normal distribution. And what did I say that number was? 49,247. That's a little bit above of that other distribution model, right? So what was that? 49,247. And this is literally about 49K. So there's a lot of confluence. There's a lot of confluence down here at this first standard deviation to the downside on Bitcoin. So the more I look at that, that is a probability of that area being tested. Okay, that's enough of that. Now let's go over here. So that's right around, let me see here one more time. Okay, 48. So now what you're looking at here, this is our alpha trading volatility range estimator with the 4-hour and daily Laplace and normal distribution levels overlaid on it. Okay, now those are higher time frames. So you can see, like yesterday, this blue cross line, that was the first standard deviation on the daily for normal distribution. Whereas this white cross line and this white cross line, yesterday, this was the 68.3% Laplace distribution range on Bitcoin. You can see we ranged a little bit, had a little rejection on the top side, another rejection on the top side. You can see where the candles closed. The skinny white lines, that was the 4-hour candle, 68.3 Laplace distribution range. We open up this new 4-hour candle right here. It was the second to last 4-hour candle of yesterday. Came down, wicked, test the bottom side, went up, right? We did look right before close. The bears pushed it down. Let's see. Actually, we did close above yesterday's first standard deviation. Right now, this will be interesting, is what you're seeing here. This red line, this yellow line. This is the new daily price action volatility range. You can see the center of the new daily volatility range is lining up with the 68.3% Laplace distribution range to the downside. There's the top side. As these 15-minute candles populate, you'll start to see all these ranges a little bit better. Here's that first standard deviation right here. See the blue crosses right there, 49,233 about. 49,245 is the exact number. These ranges will fluctuate a little bit with price action. If we do get a dump here, you will see this probably move down here to, let's see. So on this 4-hour candle, this white line, that is this current 4-hour candle, 68.3% Laplace distribution range. The 95.4% Laplace distribution range on this first 4-hour candles down here, it exceeds the first standard deviation normal distribution by a little bit, probably $150 or something. Yeah, about $200. So this will be interesting price action. Now let's see here, what else is sticking out to me? Right here as well, yesterday, when you had this first standard deviation right here, normal distribution, you also had, is what this red dotted line and this red cross line is. These are the first resistance levels for the weekly and monthly volatility range. Those ranges are down here. This red dotted line, this yellow dotted line, and this red dotted line. That was the new weekly volatility range, okay? This red cross line right here, that was the top of the monthly volatility range. All right, here's the center of the monthly volatility range. Here's the bottom side of the volatility range. Now, to really get into a nice trending bull move, you want to see the weekly above the monthly and all of the daily ranges stepping up one after another, just like the last 3 days have done. Okay, that's very powerful. And this is all part of the alpha trading system. Let's see here. Now, let's go over onto the regular trading chart. I'm going to show you a little divergence that's going on. Now, on the 15-minute right now, we've got a little bit of bull divergence. What kind of divergence do we focus on alpha trading? We could care less over here about traditional technical analysis. It's all about divergence between price action and returns. Okay, that's what we're looking at. If I go back over onto our probability chart here, you can see is what you have down here. These are the returns. These candles are showing you the returns, and these are the 3 standard deviations normal distribution to the top side, three standard deviations normal distribution to the downside. Here's a nice big daily candle where locally right here, that is the highest high of the return candle. So we got a high here, and we got higher highs on these bull candles. Look at the return candle that we closed yesterday. So what just happened? We got some bear divergence, right? You got a higher high on price action. You got a lower high on the return candles. That is bear divergence. So that's why. Seeing that, I'm looking for a little bit of a pullback here. I am looking like a little bit of a pullback. Right now on the 15-minute, this divergence could actually run price action maybe up to the... I mean, it could literally run it up. It's more likely to go up if that bull div does play out on the 15-minute to go up maybe to 51.8, 51.9 area and reject from the top side of the 68.3 of the Laplace distribution on this current 4-hour candle. Here's the issue, though, is what you're looking at. Remember, these are the resistance levels for the weekly and the monthly volatility ranges. So we could just head down. Okay, we could just head down. And I'm going to make a little correction. I didn't see it here. This white line right here, it's underneath the candle, and that's the 68.3% range. This white line and that white line, that's the 95.4. And on this 4-hour candle, the 99.7 is down here that exceeds that daily first standard deviation normal distribution. Just wanted to correct that, which I did. So this will be interesting. Now we can float back over here onto the main trading chart. And this is the Alpha Trading Wolf's Bane. This is a triple oscillator that's got some teeth. This is a very powerful indicator. We're talking about Z-score. We're talking about variance. We're talking about the returns oscillator, okay? And so just like I was showing you some divergence over here between price action and returns on the daily, you can see right here. The solid blue line, that's our returns oscillator, and it just printed a higher low right here, right? And over here on the price action candles, right, you've got lower lows. So there you go, a little bit of bull div. So does it play out? That we will surely see. First standard deviation band up here is about 52.1. That was actually that 52.1 area. Look, it's right below the daily 68.3 Laplace distribution range. So that's this is what we do at Alpha Trading. We look for confluences between price action volatility ranges and distribution levels, okay? And then the divergence between price action and returns, that's how we base our trading on, right? We don't just blindly trade on divergence, but you got to take into effect the Z-score. Our DLP, right? This is Alpha Trading Deviation Log Pro. This is literally log returns weighted with deviation. Very powerful indicator, and you can see what's been going on, like right here. And this is great for divergence as well. So when I look at this DLP and I see all these higher highs, it kind of slowed down right before close on this 15-minute chart. There's a lot of div that built. Right, so if we do get that pullback, you'll see some 15-minute candles cross this zero threshold to the downside, and then we'll go from there and we'll see what's happening. First, let's pop up on the 4-hour here. I'm going to take a peek, see what kind of div. This is exactly what I'm talking about. Let me turn off these div bands real quick, or deviation bands, excuse me. So here we go. All right, you can see price action candle, right? Higher highs. Okay, higher highs on price action candles. Here's our returns oscillator. And you can see we have a built-in divergence. It did print some bear div. Why? Well, you got a higher low. You got a higher low on the returns oscillator. And this dotted line right here is the zero mean. Okay, so if you see this 4-hour candle, if we get a down move here, I'll be paying a lot of attention to what happens when we do cross there. I mean, that could be a couple $1,000 pullback if this returns oscillator does get trapped down here. And is what I am looking at. You can also see there's some divergence on the Z-score. That is the pink area you're looking at. You can see there's the last local high. Here's a Z-score down here, right? Printing a lower high. So there is right now divergence on Z-score, and this Z-score is the Z-score of log returns, not price action. That's all we care about, right? We want to look for divergence between returns and price action. Why is that? What are returns? It's the returns of your investment. So when you get divergence between price action and returns, it's literally telling you the return on your investment is diminishing. It's time to take profit. Reevaluate what you're seeing in the charts. There's always going to be another entry. We do not sit in long future positions. We do not sit in short future positions. We are constantly taking our profit. That's how you become a profitable trader. It's the only way you become a profitable trader, especially in cryptocurrency. Famous for taking people's profits away. Don't let Bitcoin take your profit. That's the 4 hour. So yeah, I'm going to say again, I'm looking for a bit of a pullback today. Let's go up to the 12 hour. Bear divergence once again, not on the Z-score. You can see the pink area, right? Got higher highs on price action, higher highs on the Z-score of log returns. But the returns oscillator, bear div, right? Lower high on the returns oscillator. Did print, you can see the red line. Now we have this built in for people to learn how to spot divergence, okay? That's the only reason. I highly recommend all you traders out there learn how to read divergence, especially divergence between returns and price action. It's going to change everything you know about trading once you understand the simple fact. Fact, I say, okay? So let's see here what's going on. Now, this white and pink line here, this is variance. Variance is a spread of data around the mean. What is the spread of data around the mean? It's volatility. The standard deviation of returns is volatility. Okay? So when you see this white line turn pink, that means that there's an outlier with the variance. What's an outlier in statistics? It's when there's a fat tail event. All right? A fat tail event is a move beyond the second standard deviation. So that's when you see it turn pink, you'll see moves. And here's what's great about the alpha trading indicators, especially volatility. What do we do with our volatility indicators? We correlate them to price action using a correlation coefficient. And when you have variance rise, when the spread of data moves away from the mean, okay? When you have an outlier, this bottom line, the blue and pink line, that is telling you whether it's positively correlated or negatively correlated. All right. Now look when this move starts. Look where the correlation, this blue line was going up, correlation breaks, negatively correlated. And you can see, check this out, right when the outlier starts, it's with this bullish candle right here, right? And in correlation broke positive. So we had a nice 12-hour candle. But as soon as that correlation broke to the downside, the outlier continued, we had a big pullback. This is what's great about the alpha trading indicators. This is what we do with volatility. We correlate it to price action, and not sometimes, all the times. If you have a move in volatility, if you have an expansion in volatility, and it is positively correlated, look at this. See how this is positive? Look at the outlier. Look at the price action. Okay? Even when variance starts to go, it doesn't have to be an outlier. When variance heads up, it's positively correlated, you are going to get a move to the downside. Just like when variance goes up and it's negatively correlated, you get a move to the downside. All right, all you guys out there in traditional technical analysis land, wake up. Come see us at Alpha Trading. The link to our Discord is in the description of our videos. This is a volatility indicator, right? This is our alpha volatility radar. This is a little more, this is not beginner stuff right here. If you really want to learn how to read volatility in its purest form, you need to come into the Discord, check us out. but it's the same. It works the same way. Look at this low length volatility indicator. When you get when volatility expands right there at the beginning, it's positively correlated, and you get some nice 12-hour candles to the top side. As soon as that correlation breaks to the downside, you get a massive pullback, right? You get a massive pullback as this volatility expanded. So yeah, come see us. This beautiful indicator down here, right? This is our entropy indicator, right? And so the bottom side of this indicator is entropy, right? Entropy is going to tell you whether or not this price action is random or it's in trend. Okay, when it's up around the center line, especially when it's yellow, it is telling you this is just randomness. Okay, the top side of this indicator is the R squared between that entropy and price action, right? What is R squared? It's the coefficient of determination. It is literally going to tell you whether or not the correlation is increasing or decreasing. Very powerful indicator indeed. So once again, 4-hour, 12-hour bear divergence. Let's go up to the daily now. What are we seeing right here? Now this is a little bit even uglier. Now why am I saying that? Because the daily returns oscillator is below the zero mean, right? And right up here, you can see where it printed a lower high on the returns oscillator, right? Look at after this whole move up, the returns oscillator was going down. What's that tell you immediately? The return on your investment was diminishing, right? If I was trading this move, which I didn't, got a busy life, I would have been out. I would have been out of that move, 100%. Now look back here when this begins to have an outlier on the daily, right? Turns pink. Look at the correlation break positive, right? Boom. Great move. How big of a move is this? 41K. Only about $7,000 move. Nothing to write home to mama about, right? Just kidding. Great move, right? Penny, how long were you? Were you 1 Bitcoin long? 2, 3, 4, 5? Do the math. So right now, this daily chart is telling me that the return is diminishing, okay? And now look what's happening down here. Look what's happening down here. Correlation is breaking flat. Right. So when you have flat when the correlation's flat, look, this is going to be interesting to see what happens here with the variance. Is this variance going to turn back down positively correlated? And is this price action going to walk down? Or is this going to turn pink again, right? And tell you it's still negatively correlated as variance takes off. Either way, I'm looking for a pullback. So let me see. Let me drop down to about a 4-hour. I want to take a look. Over here, we've got some power means set up on price action. And this is some confluence I'm looking for. So this top power mean on the 4 hours is about 47.8. So what do I do immediately? I come over here. 47.8. I mean, that is about the 95.4 on Laplace distribution for the daily, right? So, I mean, that'd be a hell of a move, right? There's a lot of over-leveraged longs out there right now. Wouldn't shock me at all if we went down to test that 4-hour power mean. We will see, though. More likely, though, it could test one of these log MAs. But let's go up here, back up on the daily, and let's take a look where these MAs are at. The top one, there we go, right about 48K. So this top log MA right here, and the 4-hour top power mean is within about $100 of each other. There's a little bit of confluence there. So I'm going to be paying attention. But like I said, I do believe this divergence is going to get us a little bit of a pullback with Bitcoin before we do resume this bullish trend that we're in. Yes, I do believe we are in a bullish trend. This last quarter is going to be pretty powerful. Pretty powerful indeed. All right, guys. All you Ethereum fans out there, let's pop over onto ETH. Dun, dun, dun. All right, let's get some probability levels for Ethereum. There we go. Beautiful little ETH, huh? Beautiful little ETH. Let's see here. So, 68.3% Laplace distribution range. Top side 3607, bottom side 3469. 95.4% range, top side 39.23, bottom side 34.69, 99.7% Laplace distribution range. Top side 44.31, bottom side 28.25. Now normal distribution probabilities. First standard deviation to the top side 37.03, bottom side 33.12. Second standard deviation normal distribution. Top side 39.15, bottom side 31.33. Third standard deviation normal distribution. Top side 41.39, bottom side 29.63. Now, let's pull up. You know what we're going to do? We're just going to take a look at, let's pull up. Boom, let's move. Let me get my handy little measuring tool here. Let's move this projection back here to this 10 point, or well, actually, I'm not on Bitcoin anymore, am I? 30 bars. How much of a dump did ETH get though? 39.57. About $1,000 pullback on ETH when Bitcoin pulled back 10.5K. So I want to move this back 30 candles. Let's do this real quick. Dun dun dun. There we go. Let's see what this is looking like. Let's see where we're at. Yeah, okay. So we're Ethereum is working back up to the mean of this projection, right? Where's that at? 39.21. 39.21. What else is right there? Look at the 95.4 Laplace distribution range, 39.22. Okay, a lot of confluence with the mean and that. But like I said, I'm really looking for a pullback first. Maybe we don't hit that level yet, but I'm looking for Ethereum to hit the mean of this projection, right? And that's literally about another 4K above. So, or $400 above. My bad. Used to dealing with old Bitcoin, the bigger numbers. All right, now let's take those off. Let's put projection boss 1 up here. And it has started exactly where I wanted to start it from. You can see right now. So where did Ethereum move to? It's getting rejected at the 95.4% Laplace distribution range right here. So up to the looks like first standard deviation normal distribution for Ethereum and this 95.4% range. They're literally, what is it, 37.03? Yeah, they're within it. It's literally within about $8 of each other. Nice little tight range here. So does ETH pull down to the 1SD to the downside first at 33.12? Could, couple $100, then bounce and rip up there. We will shortly see because I'm about to get onto the regular charts. Let me pop over here on the VRE though real quick. See what we got going on, where Ethereum's daily range is. Okay, here's Ethereum's new daily volatility range. It needs to be tested. Same with Bitcoin. That's one thing I didn't mention. These price action volatility ranges get tested. The daily, the weekly, the monthly. When you work with the alpha trading system, you will never buy a top or sell a bottom again. You will never get out of position. That's what's powerful about our indicators, okay? They're going to tell you exactly what's going on between price action volatility ranges and distribution levels. So let's see here. The daily 68.3 down here. I already mentioned it, but yeah, like 34.70. That could be a possibility, and it's right inside the new daily volatility range. Right inside it. Where is it to the top side? 36.07. That's right. Okay, so this will be interesting. You see how ETH, this 4-hour candle, handles this 4-hour 68.3% range. Let's bounce over here and let's check out. Let's look for some div between price action and returns. Yeah, just like Bitcoin, it's definitely on the daily, and the returns oscillator is below the zero mean. Okay, is below the zero mean, and you can see. Let's see here what's happening. Yeah, and you can see right here when we had an outlier. As soon as you had an outlier right here, and the variance turned pink, it was positively correlated, right? Now look where the correlation breaks sideways. What happened to the variance? When variance is heading to the downside and it's flat or negatively correlated, price action walks up, continues to walk up. That's what you're seeing here. When variance expands and it's positively correlated, it starts to pump. When the variance turns to contract and the correlation breaks negative, price action will continue to walk up. These are things you will learn if you come into the Alpha Trading Discord. All right, so that's on the daily. I'm pretty sure there's going to be div on the 12-hour too. Yep, and you can just see it printed real quick and just disappeared. That's because price action's fluctuating a little bit, right? For that div to print, you're going to want to see this candle drop below the high of that candle. That's how that works. So let's see here what's going on right now. You can see it is having an occurrence, right? You're having a fat tail event. If you see this correlation on the 12-hour turn down and break negative and you continue to have this outlier, you're going to see a dump. That's how this works. You're going to see a dump. So yes, there is bear divergence over here as well. And I would imagine it is on the 4-hour too, and it is printed. There are 2 stabs. So once again, this will be interesting because both 4 hours, Bitcoin and Ethereum, there is bear div on the 4-hour, but the returns oscillator is above the zero mean. Some of the most powerful moves you can ever get in price action is when you do have some divergence, the returns oscillator gets to the zero mean and bounces, turns the other way and starts to head back up after it plays out that bit of div. You can have some very powerful price action. So for that to happen, I would want to see this correlation turn down and the variance continue to come down. Okay, like I just said, when you have a negatively correlated variance that is contracting, you will see price action walk up first. But considering there is bear div on 4-hour, 12-hour, daily on Bitcoin and Ethereum, look for a pullback here, right? This would be a time. You know, we don't sit in long-term positions, but if you are one of those people and you don't know how to hedge your position, right, so you don't incur any losses, figure it out. That's another thing. You want to learn how to do this stuff? Come into the Alpha Trading Discord. Links in the description. Okay, that's, yeah, Bitcoin. I would imagine right now Bitcoin and Ethereum are highly correlated. Maybe in the video tomorrow, I will show you how to use a correlation coefficient to correlate 2 assets to see. Because usually at Alpha Trading, we're not just trading one asset, right? We will get into a couple, 2 or 3 positions at the same time with assets that are highly correlated together. If they're negatively correlated, that's what you don't want to do, right? That's what you don't want to do. All right, but that's about enough with Ethereum. Now we're going to pop over onto Cardano and finish up this lovely short little stream. Let's see. You know what? Let's go over to some perps. Okay, there's Cardano. And let me change up these other charts. Cardano. And Cardano. All right. Now on the daily, here's what I want to see. So where am I going to take Cardano to? This is pretty good. Look, we're seeing the same thing on Ethereum, right? We started this up move, right? Same thing that's happening with Ethereum. 95.4% Laplace distribution range. Rejecting from that. Now we're going sideways. And one thing I want to mention, like when you're thinking in probabilities, so when I say 95.4% Laplace distribution range, that is telling you there's a 4.6% chance that this price action gets outside of this range. When price action is up here at the 99.7%, there's literally a 0.03% chance you get outside of this distribution model. So think of it in terms like that. Same with the 68.3, right? When you get down there at the 68.3% range, it's the same damn thing, right? You got to think in percentages. So that's what's going on with the PB1 and the local. We had that little local low and the move up. Now, let's turn on PB2 and I'm going to do the same thing. I'm going to go back to where we had this big down day, just like we did on BTC, just like we did on. And same, 30 bars, already knew that. Yep, it's already there. What am I doing? So look, you can see on that big dump candle, and this is on Bitcoin and Ethereum. This is what I'm talking about. For that price action, that's why. Why did this wick up? And this is the same on both those assets. I just didn't bring it to attention. Look where the candle closed. It closed right inside the 95.4% range. Why? Because at the close of this candle, there was only a 4.6% chance that price action was going to close outside that range. There was only a 0.03% chance it would close outside the 99.7. There's people out there, you're starting to understand why we trade volatility, probability, and statistics. This is why. So when you saw this big move, right, if you're trading that move, you are taking profit at the 99.7. And look at all that profit you would have taken. And look, people that are just sitting in the short, oh, we're flipping bear. I'm going to sit in this position. Look at all the profit they lost that day, right? And then if they're still sitting in it and they don't take profit on that wick, chances are they got stopped out. All right, so just take your profit, limit your losses on trades. You want the secret to become a profitable trader. There's 3 things, and one thing is the master of it all, and it's the only type of trading psychology you need to understand. All the trading psychology out there is a bunch of bullshit, right? There's only one thing you need to realize. Do not be emotionally attached to your trades. You need to express your human emotions. You don't need to write reasons why in a damn diary or a journal why the hell you got into a bad position. Don't be emotionally attached to your trades. Do you know what that allows you to do? That allows you to take your profit at the 99.7% Laplace distribution range, right? That allows you, when you get into a bad position, to limit your loss. Because as soon as that trade turns against you, you haven't put a stop loss in the system. Because alpha traders, we're only trading when we are monitoring, when we are sitting at our workstation trading. We have the stop losses in our head, okay? That's where our stop loss is. So you immediately, if that trade turns against you, have a number in your head that you want to limit that loss at, market sell or market buy right out of that position, live the fight another day, wait for your next entry. That is the key to just having an incredible P&L, right? It's pretty simple. Don't be emotionally attached to your trades. Take your profit, limit your losses. It's very simple. All right, now, so that's what's going on over here. Now, the mean, just like I showed you on Ethereum and Bitcoin, is at $2.87. I will be looking when this does resume after we do get this little pullback to Cardano make another push towards that $3 range. Now, let's go over here. Now look right now what's going on. So Bitcoin and Ethereum haven't tested their daily range yet. Cardano has. But because we're seeing, I guarantee you, let's pop over here real quick. Let's go to a daily. Now, we probably aren't going to see, we might not see the same divergence, and we're not. We're not seeing div on. Now, I was talking about this in our Discord on a live stream earlier when we were doing some education. Don't be surprised. You got Bitcoin and Ethereum. There's bear div all over the place. 4-hour, 12-hour, daily. You're not going to probably find div on Cardano. Cardano's not creating any div. So look for Cardano to have a little bit of a breakout. Maybe lead the market for the next couple days. Well, let's see what happens, right? Let's go down here onto the 12-hour. Probably not going to see any div here either, and you're not, right? Look, higher highs or higher lows on price action, lower highs on the returns oscillator. So yeah, everything's looking good. Everything's looking good on Cardano. Let's see about the 4-hour. I wouldn't be a bit surprised the 4-hour was building some bull div. Actually, no, there isn't. Well, I'll take that back. So what divergence is building on Cardano from back here? It's building some hidden bull divergence, continuation from these moves right here, right? Because over here, right, you got a lower low. Over here on the indicator, you have got a low and a higher low. And look at Cardano. Look at Cardano on the 4-hour. It's right at the zero mean. Wouldn't be a bit surprised if Cardano has a little breakout, to see the variance have an outlier, turn pink, and discontinue positively correlated. Yep, DLP is not showing any divergence either. Look at the difference, right? Look at the 4-hour on Cardano. Volatility is crushed. There is a move coming on Cardano. 100%. I bet if I turn on these deviation bands, you're going to see these deviation bands squeezing price action, and you are. Okay? And we are above the Gaussian mean here. So let's see here. What's this top band at? 234. It's about a 12-cent move. We'll see what's going on. And on the 4-hour, Cardano is above its power mean. Cardano is the best looking chart right now, to be honest. I wouldn't be a bit surprised that if you see a nice little dump out, and you notice when Bitcoin and Ethereum had that pullback the other day, Cardano was just hovering around like 220, just hanging out. I think got down to 217 when the other two had a little bit more of a pullback. If you see that bear div play out on Ethereum and Bitcoin, you're not going to see a big of a pullback on Cardano, and then Cardano might bring the other two out of the hole and lead the market for a couple of days. That'll be interesting. That's what these charts are telling me at the moment. And just for kicks and giggles, let's get down here. I live on the 15-minute, right? Let's see, 15-minute volatility. Everything's flashing indeed. Let's see these bands are probably squeezing price action just there on the 4-hour. Yep, starting to squeeze down. Let's see, and variance is low, right? Variance will never give you a negative value, only positive, and it is positively correlated right now. But when variance is coming down and it's positively correlated, price action is going to walk down. So for Cardano to bust out and break up here on the 15-minute, you will see variance turn and start heading to the upside. There is some bull div. And right now, the returns oscillator is right at the zero mean. If it were to turn up right here, it's going to create another stab of bull div. Could send Cardano up. All right. So that's going to be the analysis for Bitcoin, Ethereum, and Cardano today. I appreciate all you guys on YouTube giving us some views. If you haven't subscribed to our channel already, do so, right? You're going to want to know when we put out these analysis videos. I'm telling you right now, you're not going to find too much better out there in YouTube land. We are some of the only ones putting out videos doing analysis using volatility, probability, and statistics. We trade with the smart money. Who's the smart money? The high-frequency trading firms. 90% of this price action you see going on is being driven by the algorithms from these high-frequency trading firms. Do you know what they call retail traders that use traditional technical analysis? The dumb money. It's time to switch teams. That's what we're doing here at Alpha Trading, right? The link to our Discord's in the description. Come check us out. There's 2 different levels to our Discord. You'll see it when you come into the waiting room. Other than that, wherever you live out on this big, beautiful blue marble full of fun crypto trading, have a wonderful rest of your morning, afternoon, or evening. I'll see you tomorrow right around a little bit after the opening for the new daily candle. See you guys.